Good morning, everyone. Just to caution everybody, our presentation does contain some forward-looking materials. Novagold is a development stage company. We've got two large-scale mining assets in North America. The Galore Creek project in British Columbia is a large copper, gold, silver deposit. We co-own this project with Teck, one of Canada's largest diversified miners. But our flagship project is the DONLIN gold project located in Alaska. This is a 50-50 joint venture between Novagold and Barrick Gold, the largest gold producer in the world. DONLIN has all the attributes that we look for in a project. It's got size, it's got partnerships, it's in a safe mining jurisdiction. It will be a long life mine on what we know today, almost 30 years. It's got good grade, and in spite of its size of 40 million ounces, it's got room to substantially grow. What we see at DONLIN in and around the known pit is 34 million ounces of proven and probable, another 4 or 5 million ounces inferred, and 6 million more indicated. This is a large-scale deposit. It's one of the largest undeveloped gold deposits in the world, and the only large-scale asset in North America. When you take a look at the DONLIN project and compare it to the other development stage projects around the industry, it's far and away the largest. It will also, in its first 5 years of operation, produce 1.5 million ounces a year, and over the life of mine, it'll average a bit over 1 million ounces a year. This is a big gold deposit. Were it in production today, it would be the largest gold mine in the industry. To give you a context of the scale of this asset, when you look around the gold industry, there's about 200 mines of any consequence. But there's only 5 that either produce or are capable of producing 1 million ounces a year. And some of these other operations have been around a long time, and their production profiles are steadily declining. DONLIN really is in a unique class when it comes to scale. The other thing that sets the DONLIN gold project apart is the grade. DONLIN's grade is 2.25 grams. It's an open pit mine. It's a very high grade open pit mine. This is where the gold industry was 10 years ago. Right now, the average open pit grade is about 1 gram. Many of the new mines that have been developed in recent years are grading 1 gram or less. This genuinely is a high-grade deposit. Over the years, when the owners were drilling this, every year we drilled, we constantly added to reserves and resources. But when we got to about 40 million ounces, it was time to stop drilling and focus on the necessary technical and environmental studies needed to take this project forward. To give you a perspective of where the 40 million ounces sit, we have about an 8-kilometer gold-bearing district at DONLIN. And we've only extensively drilled 3 kilometers of the strike length of this district. We've got gold-bearing holes all up and down, from quartz to dome to Ophir. They contain ore-grade mineralization. When the time is right, we'll resume exploring, and we certainly have the real estate to double the endowment at DONLIN. Claude presented some very compelling arguments that support higher gold prices based on the currency and economic turmoil and other events in the world. We'll look at it from a different point of view. The first is, in spite of higher exploration expending in the last bull market, people just aren't finding much gold. The rate of discoveries has dropped considerably. We're not aware of any major discovery in the last few years. It's getting harder and harder to find gold, especially in jurisdictions like North America. Production's rates are declining. Gold production has peaked. Every major gold company has the same issue. How do you sustain your business when you're not finding new deposits? And Claude mentioned central bank buying. That's continuing today, as well as retail and other investment purchases of gold. So the backdrop for higher prices is strong on supply-demand alone. Take whatever view you may on currency, but supply-demand will ultimately drive prices higher. Claude mentioned Novagold as a case for leverage. We are a very levered company. Our project has relatively modest returns at current gold prices that increase substantially as prices move up. Yeah, our partner is Barrick on this project, and they've had, certainly like a lot of the major mining companies, they've had a pretty difficult time over the last few years. However, DONLIN, the ownership structure now, DONLIN Gold LLC, was formed in 2007. Since that time, both partners have steadily funded and advanced this project. You know, we're in the permitting stage, and it's going very, very well. But neither of us have a build this asset, build this mine at any price mentality. When the time is right, this project will go forward and provide returns to each owners for many decades to come. You know, Alaska is a great place to be mining. I've worked for Barrick for many years myself. I've mined all over Africa, Australia, the former Soviet Union. Every place in the world has challenges. North America is a time-consuming permitting process, but once you're done permitting, you can keep the fruits of that labor. I would rather be operating in Alaska than just about any other mining jurisdiction around. It's a state that appreciates the value of responsible resource development. And with what's happened with the oil prices, which is really what drives the economy of Alaska, the state is very supportive of our permitting activities. They really want to see this project go forward. We've also got very strong partnerships up in Alaska. You know, the underlying land and mineral estates at the Donlin Gold Project are owned by two Alaska Native corporations, Chilista and TKC. They have an owner's stake in seeing this project go forward. You know, this ownership structure came about 40 years ago when the U.S. government and the state of Alaska wanted to settle the native land claims to develop the petroleum resources on the North Slope. They have done this, and this land was known to have mineral potential. It was designated by the state and federal government for mining-related activities and transferred to the native corporations for their economic benefit. You know, this is just two testimonials, one from TKC, who owns the surface rights, and one from Chilista, who own the mineral estate. You know, this project is located in a very, very poor part of Alaska. There's virtually no economic opportunity for the people there. They want to see this project go forward, and they're doing everything they can to support our permitting activities. You know, where are we at in the timeline? Permitting in the United States is a very rigorous, very involved process. You know, throughout this downturn of the last few years, we've been quietly advancing the permitting of this asset. You know, we're near the finish line. Right now, our draft environmental impact statement was published in November of last year. That started a 5-month public comment period. We're about halfway through that. When the public comment period is wrapped up, we'll then use the input from that public comment period to prepare the final EIS, which we anticipate will get published a little over a year from now. So it's been a great way to ride out this downturn in prices. We're not a producer, we're a development stage company, and we've taken advantage of this down market to advance our project through permitting. You know, both owners have had an unwavering commitment to get this project moving forward. Yeah, it seems like a long time permitting 5 years in the U.S. Well, it is a long time compared to many jurisdictions, But once you're done, you can keep the fruits of your labor. When you look at what it takes now to develop a large-scale mining asset, on average, it's almost 20 years. And that's approximately the timeline that we've been working on DONLIN. You know, big assets are harder and harder to develop in any jurisdiction. This slide just highlights some of the key activities involved with permitting. You know, the U.S. Army Corps is the lead federal agency in this undertaking. There are numerous state and other federal agencies that are cooperating agencies. It's a big undertaking, and we're really pleased with the progress. We've been down this road many times before. Permitting in the United States is a federal process, not a state process. Because of the high-grade nature of this deposit, it will have very low cash costs. First 5 years, a little over $400 an ounce. Life of mine, a bit higher than that. All-in sustaining costs, well under current industry averages. You know, the Galore Creek project in British Columbia. You know, this asset is not core for the company, but it's a large-scale copper, gold, silver deposit with Teck. Construction had actually started on this project many years ago, then was suspended with the downturn. We've been working with Teck to steadily advance this asset. And when you look at the Galore project and compare it with other copper development projects, similar to DONLIN, it's one of the higher grade open pit deposits in Canada. You know, when the time is right, we expect to sell this asset to further strengthen the company financially. Novagold is in great shape financially. We've got, end of last year, we had $127 million in cash. At our current rate of spending, that would last us at least 5 years. But if 2 years from now, we'll be done permitting, have $80 or $90 million in cash. If needed, we could make that last another 10 years. This company does not require funding, and we're very healthy, and we're very cautious about how we spend our money. You know, we're also fortunate to have a very strong shareholder base. Over half the shares of this company are with our top shareholders. They have a long-term view on this asset, and it's been great to have that support, particularly in these tough markets. I think it's why, part of the reasons why Novagold's share price has held up fairly well in the last couple of years. You know, right now we're a $1.6 billion US market cap company. You know, so why would you look at this company now? We're healthy financially. We've got a great gold deposit in a safe jurisdiction. We've got a very supportive shareholder base and a supportive state government. You know, we think that about 2 years from now, you know, a permitted asset is a far greater value than one that has not yet gone through permitting. And with the production profiles declining throughout the majors, this asset could be a foundation mine for us or for any other major mining company. Thank you. Take time for a few questions.
Thank you, Greg, for an excellent presentation. Yes, we probably have time for 1 or 2 questions. I don't know if anybody has. Just lift your hand and I'll come over. Greg, I'm just wondering, in terms of, I see the value, as you say, of a fully permitted project, and the fact that you made the comment that there are declining reserves. I think, without talking about peak gold, obviously projects that are fully permitted, that have great resources and reserves, are rarity. What would be the end case scenario for your company? Would this, at a right price, or would you see eventually being a partner with Barrick to be a producer? Would you mount yourself a team and be a 50-50 participant in this world-class deposit?
Well, you know, the company really is focused on getting through the permitting right now. When we get to where we are in a position to make a construction decision, we believe gold prices will be higher, and there'll be many options for the company to finance our share of the capital commitment. But we work for the shareholders. If there's an offer that makes sense and somebody's willing to pay us for the future, we would consider that. But we'd also consider taking the project through to development and into production with our partner. We're fortunate we're 2 years out from such decisions, and a lot of it will be what's the gold price and what is the world like in 2 years' time.
I appreciate that because it gives you tremendous optionality. You've got a lot of options, and that has a lot of value.
Mm-hmm. And we'll certainly keep all of our options wide open at this stage. We're routinely approached by the streaming companies and other folks about joint ventures, and we've got cash, and there's no reason to encumber this asset in any way at this stage.
Well, thank you very much.
Thank you.